fast feeling the pinch due to a roughly $4 trillion a day market moving online. Profits made from currency trading, a once lucrative business for financial institutions, are fast being eroded as customers continue to embrace the electronic era. A reduction in overall trading activity coupled with the prolific growth of electronic trading is giving banks a bit of a headache. They are now struggling to come up with innovative ways to regain lost revenue and are having to spend big to offer their own online options. Fabian Eliasson from Mizuho Corp Bank said, "The FX market has gone through a transition to being much more automated, and an obvious conclusion of automation is it becomes much more competitive. It's the same thing that happened with stocks 20 years ago when trading moved to electronic exchanges, eroding profits for traditional brokerages. The stock market went through the same overhaul starting from the late 1990s. Now banks are having to sacrifice margins between their bid and sell price to attain a competitive edge." According to Simon Jones, Global Head of Electronic Foreign Exchange with Citigroup, the e-trading business is one of economies of scale. Initially it can be tough, but there is a tipping point of volume where you begin to make money. We have to constantly innovate and spend money on technology. Foreign exchange via the World Wide Web offers customers a more accessible method both in terms of cost and convenience, as well as a greater degree of transparency in their trades, according to analysts and traders. However, the ability to adapt may not be happening overnight. Richard Repetto, a principal at Sandler O'Neill and Partners, said, "The transition in foreign exchange may take more time because the market is less heavily regulated and more decentralised, but the change is inevitable. With everything getting more transparent, it's going to be tough for foreign exchange to stay in the 1930s. The pain is being felt across the industry. Even Deutsche Bank AG, the world's biggest foreign exchange bank, reported revenue significantly lower than the prior year, even as volume of transactions it handled hit a record high in the third quarter. Larger banks such as Citigroup have already reacted by incorporating foreign exchange trading via their own platform, while others have opted for a more personal approach. Firas Asakri, head of foreign exchange at BMO Capital Markets in Toronto, agreed, saying, "Some of the larger, more global banks are trying to get into a volume game. Some of the smaller banks like ourselves are really focused on building strategic partnerships with key customers and becoming more of a trusted advisor over the longer term." Well, viewers, as always, the choice is yours, and for more choice of exclusive interviews from the TV team, please do click back to the Dukascopy website. Bye for now.